Hello, YouTube. Hello, X, Twitter, whatever your name is. Maybe we need to start live streaming to a third location, Reddit, Facebook. This is fun. All right, guys. I'm a little bit out of breath. I'm sorry this is a little bit late. I hadn't done anything but sit at the computer all day, so I took Jax on a really quick run down the street. I didn't really have much time. So what we did is we sprinted, or I ran as fast as I could for a quarter mile, and then walked for about 15 seconds, did another quarter mile. By that time, I was at the end of the street. And then I turned around and I sprinted back to the house. Not sprinted, but ran at a half-mile pace, probably, I don't know, a minute and a half or something for me. I used to be able to run a half mile a lot faster, but we sprinted back. Man, I'm out of breath, but we got a good workout and it's fast. All right, guys, thank you for being here. We got the endorphins going and the blood pressure up, but hopefully down in the long run. I haven't done anything in years, but other than jog slowly. All right. Probably be sore tomorrow. All right, and look at this we have some new features here. Do you see you could see you could see the comments on the bottom of the screen. So that's cool. I like that. We'll try it out. Anyway, all right. So let's see what we have tonight. I've been so busy, my mind's so many places, I forget what we want to talk about. But let's do this. Let's start with the lightning spread. The lightning spread was the star of the day. Sorry there was no afternoon show. I ran into problems with the Max Factor show, the Daily Factor. I literally worked on it from 1 until 8 when I recorded it. I mean, I didn't do anything but work on, well, the show and the infrastructure for the show. So sorry there was no afternoon show. Hopefully tomorrow there'll be an afternoon show. All right, so the lightning spread is the big star of the day. We just basically need to cover all the stuff we didn't cover on the afternoon show, and then you guys can ask me questions about the Daily Factor or about your favorite ETF. Hang on here. And I got this fixed tonight. It's working. It's up to date, caught up. Everything's good. Okay. I need to make an infographic out of this, but for now, here's today's price. We closed at 52.17. This is on the QLDY. So let me do this. Let's do this. Sorry, but I should have done this before. Oh, I'm sorry. I wonder if my neighbor's here. Somebody's crying. I hear a dog that's like crying, whimpering. All right. Anyway, here's the close for QLDY. They didn't pay a dividend today. They'll go X tomorrow. It'll probably be another 19 cents, whatever. All right. And here's the close for the Qs. Well, what that can tell us is it can give us the daily change for each of them. So look at this. We were up 1.16 and the Qs were up 77 basis points. So that's, I mean, come on. We don't see that every day, right? And look, we won yesterday, 196 to 78. Google finally got the price right. The price finally caught up with reality. Google's price finally caught up with reality. That was driving me crazy either this morning or last night. All right, so now, but then it's also important to look at the total return and look at this. This ball game is tied, or this ball game is 62 to 61. It looks like QLDY won in overtime. Heck yes, high scoring game. All right. We have 64% winning days where the lightning spread outperforms the Qs. You know, it doesn't some days, and it does some days, but it's hitting at about a 64% win rate right now. Gosh darn it. Hang on here. I was trying to just hit mute. Let me hit. All right, my apologies. Hopefully that gets better. Hey, Marcus, how are you doing, bud? All righty, let's do this. Let's get back here. You guys, you got any of that lightning spread, Marcus? It's a good one. I mean, I don't know. We'll see. I mean, it's early, but anyway, yeah, 6.2 to 6.1. We'll take it. Oh, and our average edge. This is just adding up because when they get behind, sometimes they lose by a lot. They might win by 2 basis points and lose by 57. That's no good, but I just added it all up. So we're winning at 64% of the time, and then our average edge, I actually don't know if that's average. I just think I summed it. No, I averaged it. And so that's our average edge. So it's 2 1,000ths. So what's a bip? I mean, a bip's 100th, so it's 2 small bips. Or there may be, I don't know if they have anything in finance for 1,000ths, a milli something or a millibip. I don't know. Anyway, so that's our edge so far with that strategy. Unfortunately, I used to keep track of the trades, and I'll probably need to change the thumbnail because it says we're going to talk daily trades, but we haven't been lately. We might start that up again if I can have AI do it, if I can automate it. Okay, here is the rolling total return. So this is just assuming you lump sum in on the day one. It's not dividends reinvested. It's just dividends taken in cash. All right, but they have to factor into the equation. It's not dividends taken in cash, and then you go to the club with it. It's dividends taken in cash and it factored into the equation, put in the bank. I kind of like these new things. Paul, I'll answer that question. That's a good question. Let's get this little update done. But that looked like a good question. I'll also answer any questions about the daily factor. If you guys saw that show, I'm really proud of that new idea, and I'm really trying to make it better. So I'll take suggestions too. All right. So this is just dividends taken in cash rolling along. We want blue over red, blue over red, blue over red. We started out hot. We were ahead. I need to put dates on here too, but it looks like 10 days in we were ahead. 11 days in we were ahead. Then we start falling behind. Look, they pass us. They're whipping us. Just like I whipped Jax tonight running. Jax is not a sprinter. I mean, I was running, and I wasn't really sprinting a dead-out sprint, but my arm was back like this because he was just at the very back of he was running just fast as he could, but there was no slack in the leash. I kept saying, come on, Jax. He just didn't have any come on in him. He goes at his pace. Anyway, but then we're behind pretty severely in here. But I always talk about path dependency and how path dependency affects these ETFs. In other words, where they go, and they don't just go in a straight line where they're at now. They go up, they go down, they go sideways. So the path dependency affects options trading, and it affects the results, of course. Anyway, so we're reeling them in, we're catching up. It's a ball game. The score is 17-14. We're behind. Now the score is 26-21. We're behind. 36-32. We're behind by 4 points. We need 2 safeties. We're behind 54-51. We need a field goal, and here we go. We kicked a field goal to win the game. We won 62-10. Heck yes. Anyway, we'll keep an eye on that. That QLDY is the lightning spread. I'm not really so much excited about that fund, anything in particular. It's from Defiance. It pays twice a week, which means nothing to me, but in fact, I don't know why they just don't pay once a week, but whatever. It's a marketing deal. If people like it, that's fine. But I care about the dollars and cents, risk-adjusted reward. That's what the max factor is about. You want to max out your opportunity for reward, right? But you don't want to just do it at any cost. That's kind of what the max factor's theme is. Kind of the theme of my life. There's no free money. You can't get 1,000% yield without something else going on too. But you might be able to get a 12% yield without affecting other stuff, that kind of stuff. Anyway. Great job. Won the ball. We're ahead 62-61. So let's look at, now this is on a day-by-day basis. So you can see right here, the first day they won, and we've already kind of looked at the graph of this. This is the one we're winning like 63% of the time, and we have a 2 1,000th of a percent edge. In here we have an average win of 2 1,000. So it's close, but I mean, it's positive expectancy right now, just from a mathematical standpoint. And I mean, beating the Qs and paying a dividend, but it's, but you have to factor the dividend in too. Like I say, you can't give the dividend to your trophy wife and she spends it and then you're mad. Then you wouldn't be beating. But if you factor it in, then you're all good, right? All right. Well, that's QLDY. Why don't we look over here? Well, there's the new max factor. Do you guys want to look at the terrible trio real quick, maybe? See what's going on there. I noticed, I wish I wouldn't have quit covering Salty. It just wasn't that interesting because they were basically using the same stocks. And I couldn't even keep track. I mean, lots of times, Mr. B in both funds. Anyway, lately I noticed, I watched ETF Inspector show last night. They have some different funds in there for shorts. So maybe we'll look at that. They have, they've kind of branched out and they're putting different funds in. All right. So this is the terrific trio. And somebody forgot to update this script. I'm going to have to fire that assistant if I see him. Let me just fix it really fast. What does that say? Oh. All right. Well, there we go. Now it's updated. I try to usually do that before I come on, but I can't do everything. At least I updated the lightning spread. All right. So let's just start here with blocks and let's just go over here to this chart. Blue is the weightings and red was the performance today. Now, like I always say, these are tomorrow's weightings. Blocks doesn't change all that much, but their weightings can grow. If, for instance, if something had a huge day, it will get bigger in size relative to some of the other ones. But in any event, biggest holdings, Galaxy. Great job, blocks. What are you doing to us? Galaxy's your biggest holdings, down 8%. Galaxy may have grown to be their biggest holding because it wasn't up 20% a few days ago. Anyway, IREN is 6.42% and it was down 3.95%. What are you doing to us, blocks? It's darn freaking Bitcoin. We should have started off with this chart. I mean, we should have started out looking at the markets, especially since I didn't have an afternoon show. This was a bad signal for the market. VIX was up today at the same time the market's up. VIX up, market up, lots of times is a precursor for it means people may be adding volatility. It means pros may be hedging into the highs. Now it could just be because of the J Powell stuff tomorrow. It doesn't always work, but it's not a good sign. What else isn't a good sign is this. Sorry about that. What else isn't a good sign is this thing right here. Now, this is starting to look a lot like that Coinbase chart. Look at all this overhead supply. And it's from that stupid freaking tweet, that they may not be doing something with China. Now, granted, when they do something with China, it'll probably run the other way through it. But as of right now, people that didn't sell there, at least, when it gets back close to there, it's been putting pressure on the market. Hopefully, we'll blow right through there. But right now, it's just not a bullish sign that Bitcoin kind of made a little local double top here at 115 and then sold off down here to 112. It kind of has the looks of something that's maybe trying to get stuck back here and hopefully not get stuck. It may just want to check this high volume node, but it's just not having a great look right now. Okay, so that's Bitcoin. Let's look at SPY. Sorry, we usually do this on the afternoon show, and I didn't even look myself. I mean, I had on CNBC. SPY, it still looks good. We'll see. Qs, did they close on the highs? Anyway, so let's look at VIX versus VIVIX. This is the pros versus Joe's indicator. Well, I'm not going to go into explaining this, but this really doesn't look all that bad. But still, we'll keep an eye on it. But I've seen it's not giving a warning signal yet. It was giving a warning signal just on October 1st through October 23rd. It was giving a warning signal, and we could overlay the market. And October 1st is right here. So it started saying caution. right there. Market was at 665. It kept going up to about 670. Then it sold off to 653 and kind of went sideways. But now the warning signal's off and it didn't come back on today. So still be cautious. Anytime you see VIX up at the same time the market's up, because they're supposed to go opposite ways. They both can't be right. Sometimes that's a precursor for a market that's toppy or getting ready to turn around. So anyway, all right. So that's VIX versus VIVIX. We looked at Qs. We looked at Bitcoin. All right. Now we'll get back to the nightly report. Sorry about that. All right. Back to because I just didn't realize blocks had done, I didn't realize blocks had done that poorly. Now, granted, a basis point isn't very bad for these guys, but really given how bad their stocks did, I'm surprised they're only down a basis point. A percentage point, big difference of 100. But that's just testament to David Nicholas's and his trading team's trading, I guess. I hit David Nicholas up and I mentioned that if he would start publishing blocks as nightly trades, we might start looking at them in here and trying to guess the dividend or trying to analyze them in a better manner. We can just check the positions, but because we don't know if we had the nightly trades, we could have seen that maybe last night he moved a bunch of his puts closer to the money. He moved his hedges up or something. I don't know, but that's kind of what it looks like. The average stock was down 2.2. He's only down, less than half of that. So great job, David Nicholas. All right, LFGY. Finally, kind of catching my breath. And I have some stuff to talk about too. I wrote down some notes, but I'll let you guys ask questions. But let's just get this over with. All right, LFGY is down 1%, a little bit more than blocks, but they did a lot closer to their parent, which is bad on the downside. They had less buffer to their parent. Now, at the same time, their stocks weren't as hot of a mess as blocks were, but nevertheless, so they did well on NVIDIA. Good job, NVIDIA. GLXY is killing them. Clean Spark, Riot, Circle. I'm sure they have Galaxy, right? Did they not have Galaxy? Well, they don't have Galaxy. Anyway, they have every other dog in the book. All right, guys, LFGY. So that's LFGY. All right, do we dare check Alti? Now let's think about this. So I'm going to guess that Alti was down about 1%. Maybe a little bit less than blocks, but blocks did a good job of protecting capital. We'll see. Oh, Alti did a great job protecting capital. Good job, Alti. Only down 39 bits where their average stock was down 1.5. That's great. That's a good look. We don't cover these daily trades either. ETF Inspector does. I wonder if Scott Snyder moved the hedges closer or something, or did something, because that's a really good outcome right there. In my opinion, for these stocks, heck, these stocks are terrible. They're down 1.5% on average. Rigetti's a dog. Look at that, down 8%. Jack says, "Don't talk about dogs like that. I'll come over there and bite your ankle." MicroStrategies. God, MicroStrategies just is, come on, MicroStrategies. I'm telling you guys, we need Bitcoin to turn around before any of these are going to be any good. People say Alti, they de-Bitcoinified. Okay, well, does it look like they did to you? Let's see the Bitcoin. SMR's Bitcoin, even though it's energy, because it's for AI and also DeFi. Mining takes a lot of power. I believe Iron's DeFi. Some of these they're at least DeFi adjacent. Hood, Rigetti's quantum computing, but it's, Qubit, MP. I guess they did de-Bitcoinify a little bit, but still, when Bitcoin's in the dumps, this thing is too. Anyway, it's the best of the three. So I think that was a good look for Alti. I was glad to see that with Alti. All right, let's just real quick check out the index buffer report, and then then I'll take questions and we can talk about whatever you guys want to talk about. But I'm addicted to this report, even as bad as it is. We've checked it out every day for like a year and a half. Salty was up 86 bips. Or no, that's not Salty, it's SDTY. Wow, that's impressive. SDTY from Yield Max. Now, this is the fund that's the Roundhill copycat where they are. I hope Jay's not watching. I'll probably never get an interview again with Mike Coe or anybody. Anyway, I don't think he takes that as a compliment. But anyway, I don't know. Imitation's the sincerest form of flattery. ULTI from Rex Shares is copying ULTY. They don't seem to be too upset about that. Mike Venuto, the founder of Tidal, was saying, what is it? Imitation's the sincerest form of flattery. So I don't think they're that upset about it. But in any event, those Roundhill funds did really well because they're doing 0 DTEs and they weren't capping themselves tonight. So SDTY is a Yield Max fund that's basically the equivalent. Has the similar trading style. Anyway, SDTY did well today. It's one that really doesn't hit our radar much. We need to have maybe a max factor on those types of funds someday. Maybe on Thursday or Saturday we'll have S&P Saturday, and we'll just line up all the S&P index funds. SPY Saturday. How about that? That's what we're going to do. I'll have SPY Saturday. All right. And we'll also look at the Qs on that day, but it does no day starts in Q. So for marketing purposes, it's SPX Saturday. All right. The worst SPX based was feet. Every freaking time it's up the most or down the most. Feet and 50. You can count on it. You can take it to the bank. Sometimes SVOL is right there. And not this time. This time it's ZVOL. SVOL didn't do great. I don't really think QUp was up 15%. I think that's a bad price. I'm not going to get upset about it. Look at this. KQQQ from Howard Chan at Curve, catching 1.25 point upside when the Q's just caught 70. He's doing as well as the lightning spread. I wonder if he's running a put spread overlay. I never look at his trades. He does all kinds of crazy stuff. Maybe he's running lightning spreads. Maybe he's copying off of Jay. And Jay was copying off of somebody else unknowingly, though. Just by a big coincidence, when Jay told me about the lightning spread, I had a guy on the day before that had a trade called the lightning spread, a fund manager, and Jay actually knew him. I said, so-and-so, and he goes, yeah. I said, he has something he's calling the lightning spread. Anyway, Jay called him up, and they got it worked out. His lightning spread was was on VIX. He wasn't running it on the market. He was doing it a different way, but it was the same. He was doing it with call spreads on the VIX. Anyway, QLDY, look at that. QLDY even did, KQQQ did better than the lightning QLDY. But that's fine. That's fine. QLDY is coming on fast. Maybe we ought to run QLDY against KQQQ and see who's doing best. YMAG outperformed the parent. Sorry, these are hard to see. I need to fix that one. All right, so let's look at the Yield Max buffer, then we'll take questions. All right, there's the Yield Max buffer. I really don't care about any of these. I care that you guys care, but I do like to see if anything just really looks bad. Nothing really looks. Murney, come on, Murney. Misty, Coney. They're catching a lot of downside, but Murney showed some buffer. On the downside, you don't want to catch all the downside, but you want to be really close or above on the upside. Look at JPMO catching all that upside. Look at YMAG catching more than all the upside. Look at Infly catching more than all the upside. Look at Snowy catching more than all the upside. Look at Palti catching more than all the upside. All right, guys. Like I said, I have stuff I'd like to talk about. If we run out of stuff to talk about, I wrote down a few notes, but it'll probably come up in the questions. The terrible trio, it's just a joke. I call it the terrific trio. I was mad because it was Friday. It was that Friday when the market was down and I was building the spreadsheet. They're the terrific trio. What it is, it's a spreadsheet that follows my three favorite right now. I think the three best, most interesting to follow, at least on a daily basis, would be Blocks, Alti, and LFGY. Now, and I have all of them. And I used to have a lot of Blocks, but I sold it to get a lot of LFGY, but I sold it to get Blocks, but I still like it and I could buy it back at any moment. It's a good ETF. And of course, Alti's probably my number one. But to tell you the truth, it used to be called the Fantastic Foursome or something like, there's something with F's, but I was covering Salty, but then Salty got too boring and it was just down all the time. It's depressing to cover. So I dropped it and renamed it the Terrific Trio. I was trying to be ironic or whatever. It's like a dad joke that's not funny. I don't know. All right. NVIDIA. So if I do this, does it still put you? Okay, it still puts it up on the screen, but I don't necessarily need to do that because you guys have seen all this. I guess, though, if I want to emphasize something, and also I guess I do this. I just, well, that doesn't look good because I have this up. Anyway, I need to learn how to run this. I guess what we need to do is put on the market. Yeah, then I can't see the. All right, well, the channel's finally started making some money, and I have an Apple monitor over there, a Cinema monitor, a 27-inch monitor. The first thing I get is the station makes money. I'm nowhere close to this yet, but the very first thing I'm going to get is a MacBook Pro, a new one, or I'm going to fix one of my old ones, and I'll get a second monitor. I would love to have a Mac. I have two MacBook Pros back there, but they both have dead batteries. But I'm going to invest in the station. I've actually been investing in the station. This month I bought StreamYard Premium, which is allowing all this stuff, and it's doing a bunch of stuff behind the scenes. I can put on, anyway, it's really good. All right, absolutely beginner and looking at ETFs which pay dividends, blocks. Any thoughts, or would you recommend for others? 10K max. Well, my three favorite, like I say, blocks, Alti, and LFGY, but there's a wide variety of these. Some of these have something called NAV depletion. You've probably heard about it if you've been getting into these. A lot of other people call it NAV erosion. It's just two different words. But anyway, all it really means is there's ETFs out there that pay 50%, say, or say they pay 36% to make it easy, and they pay monthly. Okay. Or say they pay 52% and they pay weekly. A lot of these do. So that's 1% a week. Okay, so these ETFs, they have an initial public offering. They sell options to try to make the 1%. But in any event, even whether they make the money doing options or not, some trades win, some trades lose. Regardless of what's happening, if one that pays 52% a week, it's not guaranteed, but just think about this. 1% a week comes out, and it has to come out of the NAV. So if you have... So you can be in a situation where it looks like your NAV's going down because they're taking your NAV and giving it to you in the form of distribution. That's not all right with some people. Some people hate that. Anyway, but I don't mind that. If you don't mind that, the ones I like are blocks, LFGY, and Alti. But a lot of people do mind that. And if you don't want that to happen, if you want it to act more like a regular stock where you don't have to worry about that happening, there's ones that pay 12, 14%. Say 12%. So you get 1% a month, and it still comes out of the NAV, and they can still have a little bit of NAV depletion too, but it's not as severe. And typically those ones that pay lower amounts aren't as what we would call risky. And so the best steady eddies, there's three of them. If you don't want the idea of the NAV having issues, there's three of them. And Triple QI, Big Y, and T-SPY. T-SPY is a good one. TSPY. And what's another one? Big Y. Oh, and KQQQ. Any of those could work. They pay anywhere from 8 to 14%. So it just depends. It depends on your needs, and it depends on how much risk you want to take. And my other advice would be 10,000 max. That's great, but I always think these are better for people that have other assets too. These aren't for your. Hopefully you have a job and a 401k and some money in somewhere else, and you own your home and stuff. Yeah. And if you want to put some in here to try to get a low income or to try to, learn about options or whatever. Yeah, absolutely. So it just depends if you want to put on risk or not. If you want to put on risk, like I say, blocks, Alti, LFGY, and WPay. WPAY is another good one that's in the put on risk category that I think is a really good one. I bet the guys in here agree. And if you want more safety and you're going to take, all right, a little bit less yield, you have Big Y, BIGY, you have T-SPY, TSPY, you have Triple QI, QQQI, and then you have something called SPY, and then you have KQQQ. So that's my rundown. Funny enough, Marcus is actually interested in ZVol. Yeah, maybe we should look at that. I just want to make sure we don't. I talk to you every day, and I just want to make sure I get to all the questions, Marcus. But yeah, that'd be something interesting to look at. Let's run Z-Vol against S-Vol and stuff. Remind me if I. Anyway, we'll come back to that. Doing the half short puts on the close and half on the open now. Less drag on the gap. Yes. What a great way to do it. What a great idea. I love any type of half and half solution. Wonder if you did. I mean, I'm just talking on my butt, but wonder if you did half on the open, then you sold some at noon that expired the next day, and then you sold some at the end of the day that expired the next day. So you have layers expiring at, you sell some in the morning that expire in the evening, sell some at noon for the next day. And that way you kind of get some overnight, but you get some zero DT, just something like that. I love talking about that kind of stuff. Now, here's a blast from the past, Phoenix Rising. Now, Phoenix Rising, my station's coming up on its third anniversary, it's third anniversary. Now it's its second anniversary. I guess I started in November of 2023. So it's coming up. I've been doing it for 2 years, getting ready to start my third year. Well, I did like my second or third video, and it was kind of controversial. I probably said something stupid or controversial. Anyway, I got a comment from Phoenix Rising. I don't think it was a bad comment or anything, but I didn't know how to make how to do anything yet. So his comment, I wanted to kind of clear up what he said. So I made my thumbnail and I said, I think it was you. I'm pretty sure it was. And I said, and I titled my video, Max Answers a Question from Phoenix Rising. And I think if it wasn't you, it was one of the other, and it may have been Norman, somebody that used to comment, and whoever it was got back to me and said, look, I don't think that you're going to get very much traffic from saying my name. I'm just anyway. But I wasn't trying to get traffic. But anyway, Phoenix, you were one of the first supporters of this station, up with Norman, Tom, and Bank Shop Bo. And if I'm forgetting people, anyway, it could possibly be to publish. Okay, just curious what the terrible. Yeah, sorry about that. I'll switch it back to terrific. We have puts in the money, not moving them yet. Okay, good. Oh, that's Scott. Heck yes, Scott. We have a superstar in the house. You got to be freaking kidding me. That's not Scott Snyder, is it? Surely that's not Scott Snyder. Anyway, you can count on those guys. These guys, I mean, I'm not just saying this because Scott's here. I say this every night or at least twice a week. And I don't only compliment Scott, I also compliment the trading guys over at Blocks. But yeah, those guys do a great job. I was talking about you the other night, Scott, when you made $39 million on those SMR puts. Took them off, monetized it, and then SMR went the other direction the next day. Didn't really need them, or yeah, maybe you did. It helped, but whatever. You took the cash, take the money, and run. Heck yes. Thanks for being here, Scott. S-Vol was not great today. I'm sorry about that. Dang, I need to get some of these curve funds. Well, the curve funds, I mean, they aren't really for me because I'm a little bit of a yield chaser. I'll be happy to me. I'm not an extreme yield chaser, but so I don't have any curve yet. But I mean, it's kind of always waiting to see how they do and stuff, but they've done pretty well. They've done pretty well. All right. Is SEPI a safer version of LSUI? I really haven't looked that in depth at it. I'm going to say just off the top of the hat, let's look. Let's just go see what the data says. Like I always say, we're data driven here. We got some new entrants into the max factor also, just on another. We put IMRA in, we put IGME in. MSTW somehow wasn't in. I added it today, but anyway, okay. But back to what you're saying is SEPI. So let's go to the alphabetized max factor. Let's go to the alphabetized. Well, it's pretty late, Scott. I bet Scott, I don't know if you're a baseball fan, but he's on the East Coast. A lot of guys back East, especially traders and stuff. I'm just picturing that Scott may be a baseball fan. Plus, Scott looks like he's about my age. And back when I was growing up, baseball was it's golden age of baseball, 60s and 70s, probably about 20 years beyond the golden age of baseball. Probably the 50s and 60s was the golden age. But anyway, all right. Let's see here. Oh, SEPI. Okay, SEPI. So I actually have a metric that I had to develop. That's not the max factor, but I needed another input in the max factor, and traditional Wall Street didn't have a metric for me. So I had to build one, and I built what I call a VIX, a volatility rating for every one of these. So SEPI has a 23 volatility rating, and it just tells us which one's more volatile. High means more volatile. And we can also think about it in relation to the market. So SEPI's about, that's about 50% more volatile than the market, 50, 60%. So you expect it to go up and down a little bit more than the SPY. Now, LFGY, yeah. LFGY is going to be more volatile. But also let's look. SEPI pays a 38% yield. Okay. And had 6% positive NAV. Okay. So let's go look at LFGY. LFGY paid twice as much yield. It paid twice as much yield. NAV was down, but only 2%. And that's in the past quarter. I mean, you're trading 2 for 67. I mean, it depends on what you need. Unfortunately, the volatility was at 32. So yes, SEPI would be a safer version. SEPI would be a safer version, but just beware you're taking less yield. So here's another little trick. If you don't have access to the max factor and you don't understand or whatever, I'm not around. Anytime you're looking at two ETFs, take the one with the lower yield if you're trying to look for the so-called safer one. That's it. Yield is a pretty good proxy for risk, especially when the stocks are basically the same. The stocks from SEPI and LFGY are similar. So, but here's the real thing. I'm not going to go too deep on this, but the real reason SEPI is less volatile is because they use monthly options. They don't sell options every week like Scott Snyder does. Scott Snyder, they sell those every week and they're getting more, they're turning their money over more, but look, and they can make a higher yield. The only drawback with weekly option selling compared to monthly is it caps the upside a little bit more effectively, but it also brings in yield a little bit more effectively. So it's a trade-off. All right. That was a great question. I love those types of questions. I could answer those types of questions all day. All right. So you like FEPI and AIPI, but not SEPI yet. I don't have any of them. Once again, they didn't have a high enough yield. I mean, everyone liked FEPI when it first came out, and it's all right, but I got into triple QI and in Misty and AMDY and called the top too. I called the top in the market in late December. But anyway, that's neither here nor there. TDAC has, yes, it does. And I can't mention all of them, but I was hoping you guys would be helping him also. I figured you guys would make comments. That's probably for him. The only thing I don't like about NEOS are the dividends are a bit low besides BTCI. Yeah. All right, Phoenix, what's up? QQM, TDAC, and QLDY. I'm really liking QLDY. I'm really liking QLDY. There's Scott. I should just, it's late where Scott is. I'm going to go find, is that the last comment? Okay. I should have just read all Scott's comments first, address them, because it's a special treat to have him here. That's, it's not every day you get somebody that manages billions of dollars in, it's just like having Jay on. Jay also manages billions of dollars. Jay and Scott do it together, and the rest of the team. All right. And it's, or like having Mike Coe on for that matter. They're all industry studs. All right. So yeah, I figured you were. Scott saying yes, talking about a few alt positions. All right. So let me get back here. Let's Marcus, we'll get to your question in a second, but since Phoenix hasn't been around forever, and I see you every day, Marcus, but I'll do your question next. All right, QQQM. What the hell's that? I'm just joking. I used to know. It's in the max factor. There's so many of these. It's a NASDAQ momentum index, I think. Sorry about that. I can't know everything. Did you guys like the new graphics on the max factor? I'm trying to be consistent and make that like a thing. So help me share, like, subscribe, share it with friends. If you think I do a good job, if not, that's fine too. Then don't tell me, tell me how I can make it better or whatever. That's fine. But all right. Yeah, I think QQQM is a momentum cues. So and I usually kind of limit the show mainly to the ones that pay a yield and stuff. But let's look and see if this guy pays a yield. All right, Invesco, NASDAQ 100. Look at this. Maybe yeah. Well, see, there's right here dividend trailing 12 months. It doesn't pay a yield. Well, but wait, but dividend growth. Well, that doesn't mean anything. Look at that expense ratio, 15 bips. I think this is just a momentum thing. I think they probably. I mean, look, it's Nvidia, Apple, Microsoft, Broadcom. I mean, if you think the bull market's going to keep going, yeah, that's a good one. Let's look at it this way. Let's run it against the triple Qs. But I was just saying, I bet maybe Scott's up because he's watching the ball game and he just looked over at his phone and saw we had a live stream on. It looks like Blue Jays just went yard, I think. I caught the end of the replay. I'm not sure. Is it over already? Yeah, I guess it was a walk-off. Anyway, all right. Well, I missed the game. So, I mean, they look the same to me. Dividends collected per share, $1.25 on 200. Yeah. I don't know. I don't know about that one, but yeah, I generally like the NASDAQ for sure. I mean, mini Qs. Those are mini Qs. Is that all that is? I've traded mini Q futures. Oh yeah, here's Scott again. Have a great night, Max. Appreciate you. Have to go. Okay. See you, Scott. Have a great day. Thanks for being here. Appreciate you. Yeah, it has been nice, salty going back up. All right, triple QM, TDAC. Now we can start talking about what we really think about these damn funds. Now that Scott's out of here, we can't talk in front of him because he'll tell Jay. And we don't want to say anything bad, and then Jay will get mad at me, and Jay won't send my check. I'm just joking. I'm just joking. Oh my gosh. All right. TDAC, yeah, TDAC's a good one, and QLDY. I mean, let's run TDAC and QLDY. I guess I'm going to say QLDY out of all of those, but I mean, I'm just obsessed with the lightning spread. Here's what I would say though: if you knew the market was going to go down, TDAC would probably work a little bit better than QLDY. But if you knew the market was going to go up, I think QLDY might have a little edge, but it's going to be close either way there. It's going to be close. I mean, you got some good ones there. Looks like you don't have a bad one in the bunch. All right, Marcus, I'm going to get to your question. Let me just make sure. Yeah, we'll check out Powell from Vista Shares, Marcus. Yeah, and I want to talk about that. I was going to talk about the Fed meeting, and I made changes in my portfolio today. We can talk about that. I'm just trying to let you guys talk for once because I know I monopolize the conversation a bunch, talking about high school and stuff, whatever, and music. NVIDIA's 207 after hours. Kick ass. Absolute beginner. Okay, yeah. So I think I've answered that question, Paul. I hope so. I hope I didn't just confuse Paul. But Paul, just keep watching. We have a Discord. The guys in there are real helpful, especially Marcus, especially a guy named Mark. They're helpful with beginners. We have really good option traders. If you have option trading questions, there's a guy named Scramble that's a really good option trader, and lots of other ones. SB is a good source for information. So join our Discord. I'll post the link in a second. Oh, this was Scott. Okay, see, I didn't realize this was Scott Snyder the first time I was answering this question. Okay, doing the half short puts on the close, half on the opening. And I was giving him advice like he's a retail trader. I'm such an idiot. Why don't you do half? I'm sorry, Scott. If you're still listening, Scott, I'm sorry. I didn't realize that was Scott. But let's see. So this is big news. So he's doing half short puts on the close, half on the open. That's wonderful. I mean, I thought that was just one of you guys talking about a trade that you guys were doing. I mean, I'm interested in what you guys are doing too, but I didn't realize that was Scott. Sorry, Scott. He's probably not still here. And tell me Scott didn't say what's the terrible trio. Just curious. Okay, no. Anyway, we have puts in the money, not moving them yet. So that means they're protected. That's why it won't go down or it hasn't gone down. In other words, they haven't taken them off. They could have taken them off today, otherwise known as monetizing them, taken the cash, put it in their pocket. And then, but you know why they're doing that is because Jay Powell's speaking tomorrow. And you know what I think? My theory is it's going to be buy the rumor, sell the news, and the Bitcoin bros know or something. It doesn't matter if he lowers it 1% or 0.5%. I'm afraid that whatever happens, it's going to go down because the pros have already know what's going to happen and they've already bought it up. Guys like Scott, and they've already hedged it off. Scott, I'm so sorry. I didn't realize that was you. This is not one of my better nights. Anyway, I'll know next time. I wonder if he was in the stream last night. I was talking to him like he's a retail trader. Oh my gosh, this guy manages billions, and I'm telling him, why don't you sell some at lunch and do? Anyway, all right. Yeah, we need to get some curve funds, exactly. All right, just make sure I caught up. Yeah, I am. So I'm that way all the time. I'm a bullet on a mental box. Yes, I'm exactly. That's how I am. All right. You thought I had FEPI. I talk about it like I have it. I always say it's one of my favorite stocks. I wear the shirt. I might get it. I mean, I raised some cash today. I have making a shopping list. I could always get it. But yeah, I'm sorry, I don't. I believe in it and stuff, but like I say, it pays 25%, and I like the ones that pay a little bit more generally. So, all right. So Marcus, I'm sorry to put you off. I know it's late there where you're at. Funny enough, you're interested in Z-Vol. Wonder how it's been doing. Okay, let's run Z-Vol against S-Vol. I used to like Z-Vol. Well, I'm glad I didn't say anything. I mean, seriously, I never talk bad, but I mean, could you imagine if I would have started talking about, man, these guys are stupid. I can't believe and I rarely do that, but I'm known occasionally to make kind of a wise guy comment. It could have been worse. I still can't believe I'm telling him, like talking to him like he's a retail trader trading one lots. I'll have to send him an email. I think he knows I'm sorry. I think he probably gets it. All right. I mean, it doesn't look great right there. It looks like Z-Vol never recovered after the April lows to me. And I really haven't studied it. Maybe we need to do Z-Vol's making S-Vol look good there. Maybe we need to do a little, review on Z-Vol and S-Vol and catch up on what they're doing. I think I was going to do one on S-Vol, but they just aren't very transparent. That's the good thing. One of the main good things about YoMax, they're transparent. All right. So I'm glad Tesla's going up after hours. Like I said, I feel bad I didn't answer Paul's question probably. Gosh darn it. I still can't believe I'm thinking about making a blooper show for my 2-year anniversary. My 2-year anniversary is coming up. Maybe I'll even show that highlight from when I did a video and put his name in the thumbnail. And I'll probably show some early comments from Tom and Norman. Tom used to always give me kind of critical comments, constructive, but he's not really a believer, but we go back and forth. It's all good. I mean, he's influenced me a lot. Tom's a smart guy, and he made me see some things that I maybe had blinders on for. Anyway, that's great. Scott's not moving that just makes me so happy. They've got the puts on, they aren't moving them. So, all of those stocks were dogs. They dropped. I mean, every single one of them. I mean, because Bitcoin's been under pressure. So what that means is they have puts, and lots of their puts are already in the money. It's gone, the price has gone beyond them. Now, they could have taken that off. If they would have thought it was going to bounce tomorrow, what they would have done is they would have monetized it, taken it off the table, put some in their pocket, and then rolled the puts down out of the money, spend a little bit on the puts, but put money in your pocket. Now, if they do that and then it goes down tomorrow, they made the wrong decision, because now they catch the downside from here to here. But what they did is they said, no, we're going to leave these in the money. So how this messes you up is if it's limit up tomorrow, these idiots on X Twitter will be saying, these guys are frauds. They don't know what they're doing. I mean, there's all kinds of bad comments on Twitter, but that will make them look dumb, and not to me, because the reason they're doing that is because we have no idea what's going to happen tomorrow. And I'm telling you, I'm telling you, it's good. I think it just looks like a classic buy the rumor, sell the news. The VIX was up at the same time volatility was up. I'd love to get Snyder on here to see or Jay or Mike Coe to see if they look at that kind of stuff, or if that's just kind of amateurish stuff. I found out from Tasty Trade. But yeah, curve's good. All right. So I think we're all caught up with stuff. I got some stuff here to talk about. Headed to bed. Phoenix, I'll see you later. Have a good night. Okay, let's check out POW from Rising Shares. I think it's just a little I think POW is just a little. Let's see. I'll look at here. It's a veterans thing, right? Come on, FinBiz. About QQQM. Somebody said mini. Is that what they said? Mini Qs. That is that M means mini. Oh, smaller size. It's 260 though. Oh, it's half size. Qs cost 540. I just figured it out. So it's for people that don't have $540. I mean, a share. I guess nowadays you could do fractional shares. I mean, it's just a cheaper Qs. Okay, I've never heard of that. I figured it was a momentum Qs. You guys knew the answer. All right, let's check out POW. I'm just guessing it has something to do with veterans. Oh, no. POW, like electrification super cycle ETF. Wow. Okay. All right. All right. Just started today. I mean, we need to, I guess we need to do a review on it. I mean, but you know, with me, I'm going to want to look at the option strategies. If it's just a fund, I mean, hang on just a second. We'll get an answer. We'll ask Claude. Man, me and Claude were going back and forth today, and Claude's like having a teenager work for you or whatever. You have to explain everything 48 times, and then you'll catch him doing stuff he's not supposed to be doing. I mean, all right, we'll let him think about that for a second. I want to go back to the market. We'll come back to that. I want to go back to the market. So you're saying Tesla's up in 207 after hours, or was that Mr.? Mr. needs to go back up. No, it wasn't. Maybe it was Mr. I thought I read it too fast. I bet it was Mr. I have to go back and read that. Yeah, if Tom Lee jumps on the stream, I'd be starstruck. Believe me, yeah, but I'd be more. Yes, of course, I would be starstruck. But it doesn't get. I mean, yeah, it does. The person I really want to get in here is a guy named Mike Green. It's the Option Bros. There's a guy named Jim Carson, hedge fund option bro, Mike Green. Of course, we already know Jay, and hopefully Scott's going to be on the show sometime. Hopefully I can get him on the show. But it's the big option bro hedge fund guys that would starstruck me. I can't believe I had Mike Coe on the show. It's unbelievable to me. But yeah, but yes, if Tom Lee jumps on the stream, that would be something else. My gosh, I'd probably screw it up like I did this one. Next time, if somebody sees that, text me, Marcus. Somebody text me that has my number. If you see me making an ass out of myself, I don't realize somebody's on the stream. Anyway, I know you can't save me from myself, I guess. Anyway, all right. So what was that? What was that thing we were looking at, though? Let's see. It was a good question. I wanted to cover it. But yeah, I'm a bullet in a metal box. I've been that way my whole life. You ought to meet my sister. You ought to meet my sister. I mean, she's a great lady, but she's something else. It might be global energy infrastructure. Okay, Marcus. Well, let's go back and look at Claude while I try to remember what else we're talking about. Look at Claude. Claude is okay, there we go. All right. Just launched today, Vista Shares Electronic Super Cycle ETF. Investment focus. The fund targets companies, energy, infrastructure, obviously, picks and shovels sector that are upgrading electrical grids, transformers. Now, this could be huge because of AI and DeFi. This is DeFi adjacent. Did you guys see Bloom Energy was up like 26 points today or some crazy stuff? I hope Salty still doesn't have a short in it. These funds address what CEO Adam Pratt calls America's power problem. The bottleneck isn't silicon or computing power for AI, but it's electrified power infrastructure. Trillions are being, yes, I mean, rebuilding that grid. This is all just BS stuff. I mean, they just get this from their, I'm not reading it because it's just from their ad copy and stuff. But anyway, funds actively managed. I just want to see if it had options in it. It doesn't. It's a growth fund. So anyway, that's interesting. Let's keep an eye on that. But if it doesn't have options, we can't really talk about it in the max factor. We can definitely talk about it on here. All right. What was that other thing I was looking at? I was trying to look at something that you guys wanted me to look at. Oh yeah. What did you say was at 207 and after hours? Oh, there it is. NVIDIA. Okay. Well, that's what I wanted to go see. Let's see what. Hell yeah. Are you serious? Looks like it closed about 200. Heck yes. Was it earnings? No, earnings aren't for a few days. I guess I can just click here. Another AI deal or something. 5 trillion. Wow. I mean, just think they're only 10 times richer than Elon. I mean, that's amazing to think that a person could even get close to 1/10 the market cap of the biggest company in the market. I wonder if Rockefeller ever had 1/10 of the biggest, the economy, basically 1/10 of the biggest company in the economy. He probably owned the biggest company in the economy. I bet at that time it was probably Standard Oil. So he probably, through his ownership, he probably had more than that. So we just have a tremendous concentration of wealth lately. Anyway, NVIDIA best of 1 billion in Nokia. Was that what it was? Jensen Wong or Bill's plans. All right. Well, I'm going to talk about my stuff now, but I'll answer any of the questions. Okay. The portfolio right at the end of the day, I finally, I was having problems. I've been wanting to get out of GDXY forever, but I keep thinking too much and I overanalyze stuff and kind of like I talk and say stuff I shouldn't, but I'm the opposite on thinking. Sometimes I don't do stuff that I should because I'm trying to analyze it. Well, I was hung up because I just, with the market at all-time highs, I just want to take some profit somewhere. I mean, because lots of stuff I have, most everything I have is up, and some of it big. We're going to look at some of that in a second. So I was just like, okay, I've got to take profits off the table. GDXY was up 50% for me, for my position the other day. And that's before drip. I'm on full drip, probably up 60 after drip. Well, anyway, it's dropped down to only being up 25%, but that's before drip. So maybe it's 30%. Still, I was just thinking, okay, what the heck am I doing? The market's at all-time highs. I'm going to take some profits in GDXY. So I dumped it. It's done. And I kept it in. But here's part of the reason I had analysis paralysis, because I couldn't decide what to buy. Now I'm going back and forth. Should I get TDAX? Should I get KQQQ? Should I get Big Y? I really want some BITK from Matthew Tuttle. And I was, and I was thinking, well, heck, I'll just keep it in cash overnight. We'll see what Powell says tomorrow. So that's my plan. Anyway, GDXY is gone. And I locked in all that profit. Now, the thing I'm going to hate is if we have some kind of gold or silver rally overnight. So anyway, but I'm going to wait and see what happens in the meeting tomorrow. Okay. Then also, in Alti, I've doubled my share count. So I look at those as like free money, those extra shares, and they aren't really free money, but I mean, because there's no such thing. But so I couldn't decide what to do on that. So I took half of the free shares I got. So it took my Alti position from about 27% of the portfolio to 20% of the portfolio. I still love Alti. It's still my biggest position. It wasn't, because then I had GPTY weighing at about 23%. Well, I took half of GPY off the table, not half the profit, just half of it off the table. Because I have plenty of big tech exposure. And also I'm not sure about this Powell thing. Maybe I'll get a chance to buy it back cheaper. I don't know. But so that's all I did. But the meeting's probably not till noon. So I came this close to getting 2.5% of Salty. I mean, because I have about 10% now of Y triple Q. I have 12.5%. And I thought, I hate to get salty, but 2.5%, what would that hurt? And maybe it is a top. It'd be a good time to buy salty just from you want to sell high, buy low. It's definitely high. I didn't do it though. I chickened out. I might do that in the morning though. And that would bring my overall short position or hedge position up from 12.5 to 15. Marcus says 10 is what I should be at. I say 20, and I've been at 20 and stuff, but 20 is pretty aggressive. So I think 15 might be what I settle on. So that's what I did today. I wanted to tell you guys about that. And I wanted, so speaking about that, we're going to have a little study hall here I'm going to show you a trick that I learned. It gets me to, for some reason, Tasty Trade doesn't keep track of your drip and your average cost with drip and stuff. They just show your average cost where you buy. I need to get something like Snowball Analytics. Or whatever, but it's, so that's why I was getting hung up on GDXY. Or the other day I was looking at my Tasty Trade. It's closed. I don't want to dox my brother-in-law by opening it. But I was looking at my Tasty Trade and I only have like one position of all these dogs that was up money, where I look at my starting price and my ending prices ahead. And I was just like, man, these things really do suck. What am I doing? And I know some of them are down because they pay a huge dividend. I expect that, but I was like, I don't have anything up. Then recently in the last rally, I have like one that poked its head above water. On GPTY, I bought it at 23 and it's at 24 or something, barely above water. Well, anyway, and that's Tasty Trade. Well, here's something that just kind of got me in the right headspace. Jackson, hang on, I'm gonna let Jackson. Okay, so but then I was examining my GDXY position. So let me show you something here. That's just a way to look at it. I don't know if you guys do this. I shouldn't have to do this because of Tasty Trade, but all right. So you go here to the charting package and just turn on settings, and I uncheck adjust data for dividends. Now, usually I keep it checked, but just for the sake of this exercise. Okay, so I went and got my Tasty Trade account out. And I looked, and my fill was it was April. What was it? It was April 7th, I believe. Yeah. It was April. It was like 15 something, 1555. That's what it was. Okay, my fill was 1555. This is an example, and this one was up on NAV alone. But recently, it's even been down on Avalon. So anyway, looks like I'm about even. Of course, it's paid a dividend, so you have to add that in. But still, this hasn't been a very good investment, right? Well, Tasty Trade doesn't keep track of it. So, so you go look at that. I know what date I'm long from. Jackson, you get in here and you be quiet, buddy, okay? You're the co-host. Okay, so let's look at April. It was Liberation Day. It was like that Tuesday the 9th. Anyway, so let's go back and look at it. Now, this is with dividends factored in. So this is reality. Okay, so with dividends factored in, effectively, I didn't pay 15. I paid about 11 because I got $5.33 in dividends, evidently, or $5.55. So, but they just show it to you graphically here. Now, this doesn't even include reinvesting. This is just your initial position. So I basically went from 11 to 15 and a half. And I was thinking to myself, why don't I just sell this? I'm up fine. I'm up plenty. Yeah, the NAV may not be, but when you add in the whole investment, I'm killing it. So yeah, I sold it. I'll probably regret it, but it's interesting I think it's interesting to go here both before dividends and after dividends and look at this. And if this, like I say, it doesn't figure out that with all of these dividends, I bought more shares. So it's probably up a little bit more, but I'm not worried about drip because a lot of people don't drip. But even if you aren't dripping, you're just taking these out and paying bills with them or put them in the bank, whatever. You can see these things, especially this one, has been a good investment. 11 to 15, $4 on 11 over, April, May, June, July, in 6 months. I'll do that all day long. All right. Okay. What else do I want to talk about? I just didn't know if you guys knew that trick, checking before dividends and after dividends. I need to get Snowball Analytic and to figure this out to the penny. And I know that's kind of primitive, but I think it's important to keep things in perspective and look at your investment. Because you just look at, I get why people hate these. They look at their tasty trade and they're like, not one of these freaking stocks is up. Every one of them's down. That's how I feel too. I'm like, can I not pick one winner? I mean, but anyway, my only winner on NAV, I think, was GPTY. But let's look at my GPTY investment. Now, GPTY also, I bought on the Liberation Day. And LFGY I did, for that matter. So, and I don't remember my prices, but so GPTY, Liberation Day, essentially I paid a split adjusted price of, we'll call it $29. Okay, well, here we are at $49. And it was like 22% of the account. So I sold half of it. And I did pretty dang good there too, running something from 29 to, I mean, anyway, then LFGY I dumped the other day, unfortunately. But I dumped it to get blocks and WPay. So I hope that's going to pay off, because I think blocks and WPay might have a chance of outperforming this one. But on LFGY that I bought on Liberation Day, it ran from 22 and I got rid of it, about 2 weeks ago, probably 22 to 35 or something. I dumped all of it. I took that profit, locked that profit in and put it into WPay. And so anyway, I'm happy that I finally got off high center, got off my ass, quit doubting myself. And like I say, part of the problem was because I couldn't decide what to buy. Well, I don't have to decide what to buy. Well, if Jerome Powell comes out tomorrow and it craters the market, so be it. I'll wait for the market to go down and I'll get back in. Also, it's good to have cash because guess what's coming out tomorrow? ULTI, and then guess what's coming out the day after tomorrow? KYLD for trick or treat. That's going to be a treat. I hope that's going to be a treat and not a trick. All right, so I wanted to talk about that. Well, then I just want to talk about that. You get so much bad information on Twitter. There's just people that made me mad on Twitter. I won't get started. I mean, they weren't making fun of me. I won't get started. All right, let's let you guys talk. I need to shut this door. They just said some stupid things, but it's about high yield stuff. It's not about me. They didn't say Max is ugly or Max is stupid, but they said some stuff about high yields. They're very uninformed. And you guys will all agree, yeah, that is stupid, whatever. But I wrote it down so we could talk about it if you guys want. All right. So do you guys like the comments on the thing? I mean, I can always turn that off probably, although I can't figure out how to now. Anyway, I guess hide current comment. Oh, that just does that. Okay. My bad. ULTY is okay. It's Friday also. Okay. Anyway, but you know what I'm saying. So it doesn't do bad to have cash overnight. If the market keeps going up, I still have half my GPTY. I still have my biggest position in Alti. I don't have GDXY. So that's the one thing I don't want to happen is a gold rally. But yeah, it's okay to stay in cash, especially for a few days. So I texted my brother-in-law and I told him, I said, and he said, yeah, he said, that's a great idea. He said, I think we should do it. He always tells me to do what I want, but he's like, he's kind of learning about these too. And I told him what happened. I said, you remember because the last time because I texted him on Liberation Day and I said, hey, I'm going to load up on some risk because we had some short funds. I said, hey, look, we made some money on this short fund. The market pulled back. Trump just canceled the tariffs. Looks like clear sailing ahead. I'm going to load up on some risk, get you some crypto stuff. He said, yeah, go for it. Anyway, and then I texted him today and I said, look, we've done well on adding risk into the lows. Market's at an all-time high. Jay Powell speaking tomorrow. I think it could be buy the rumor, sell the news. He's a trader. He's just not an option trader. He has stocks and he's traded. He's done covered calls before, but he's not an option bro. He knows about covered calls and stuff. But anyway, so yeah, he said that sounds great. Hopefully I'm going to come out smelling like a rose because maybe we'll pull back. And then maybe I'll buy some ULTI and maybe reback. I could always buy some Alti back, some ULTY back. I could buy some GPTY back. But I really think I'm going to look at on my shopping list is ULTI and and I don't have very much QLDY. I'm on that, maybe add to my QLDY position. But I have some good things coming up. So yeah, it's not bad to be in cash tomorrow. All right, Marcus, what are you saying? Wonder why Rex shares waited till Halloween to release their ultra income. Yeah, good point. Is it going to be a trick or a treat? And also, usually these guys tried to release into pullbacks. They're releasing at all-time highs. And it's not just like we're at an all-time high, barely. This is a monster move. I mean, it is a monster. It's it doesn't compare to the move after COVID, but this is a monster move and just a monster exponential. Here's something that could happen where we do buy the rumor, sell the news, and it's not bad news. It's a very common pattern. We did it right here. You do it like where you have an established high. Say like, I don't know, it doesn't, okay, but say like right here, we have a breakout. Lots of times we'll have a breakout, but we'll go back and we'll test the breakout. So it could easily come back to, the spike could easily come back to 674, maybe even a little bit past it to get some stops, because there's a lot of people that buy the breakout and put their stops right there. There's going to be liquidity there. Stop hunters, even if they lower, I think even if they cut rates by 2% or not 2%, by 50 basis points, they'll say, hey, they'll say, well, now he's not going to cut it next time. That's, or something, they'll always think of excuse. I think they're going to think of excuse and sell it off, but it doesn't mean the crypto winners here necessarily. But I mean, it could be healthy to come back and retest this 674 area, find support, close this gap and maybe test this gap and then rock and roll, baby. But I'm going to be looking for that. And, and hopefully I'll be able to, if that does happen, be able to pick up some ULTI or some KYLD. And even if I don't get those, I'm really interested in some big Y. I really think that's how I'm going to replace the half of GPTY I sold. I really think I should get big Y. I really like that one. Pays a 12% yield from Yield Max. It's not max yield. It's only a target fund. I really think that's the sweet spot. I mean, but so it's not just these high flying ones I want to get. I think big Y's on my list, but I really would love to get some BITK also. I'm just trying to find a place for it. That's the Matthew Tuttle one that does lightning spreads. I want to have all the lightning spreads in my portfolio. I want to be sure to have all of those in there. So that's on my shopping list. I'm sure we'll talk about that more. I really don't have that much more to talk about. If you guys want to go, I understand. Let me just make sure I didn't miss any comments. If Tom Lee jumps on the screen, yes, I would be. Netflix funds are down. I mean, that's still, you guys don't know how starstruck I was the first time I met Jay. It was probably pretty obvious, but it probably wasn't, because I tried to act mellow. I didn't act excited. I didn't act like a fan. I had my questions ready. I asked him, but I couldn't believe that I got him on before Rod did. And it wasn't because I was better than Rod or anything. It was just because of the timing of it. But I was the first guy from our group of people, other than Coach, to get him on. And man, that was one of the biggest days of my life. But then I still didn't. I had no idea he'd invite me to New York. Actually, when I got that letter to New York, I knew I was part of the club. And that was the first time I was like, holy cow, they're inviting me to New York, 2,000 subs. Heck yes, I'm all about it. But so I couldn't be much more starstruck than meeting Jay, because I've watched Jay for years, just like I watched Mike Coe for years, because I see Jay when he's on CNBC and stuff. I knew that Jay was anyway, so yeah, but I'd be kind of starstruck with Tom Lee. But all right, guys, I don't know if there's any more questions. I hope the shareholders vote Elon's paid down. Okay, that's good. I missed that one before. Yeah, I mean, a week or two, I'm going to see how it goes tomorrow. I may go right back in. I mean, knowing me, it'll probably go straight up. But I mean, that's fine too, because I'd still, even if it wasn't, it's not only to protect a little profit, it was also to get some of these new funds. The thing is, I picked the best funds that were available 6 months ago. I really did. I mean, the ones that met my goals and stuff. The best funds that are available now are a whole different list. Blocks wasn't available. ULTI wasn't available. KYLD wasn't available, and so now I have to factor those into the equation. So I'm planning on seeing cash maybe till the end of the week at most. But then I thought about it. I thought maybe I should just buy some BOXX or some T-Oak, just and then sit in it till the end of the year or something. It's not a big part of the account, and just totally protect that part of the account. But anyway, I think I'm going to redeploy. I said by the end of the week, but it's going to be fun to get to do that. Have Alti and Curve? No, they're not trading. Okay, we are all caught up. It is late. You guys can be excused. Thank you so much for being here. Thank you for me watching me make a fool out of myself, talking to Scott. Oh gosh. All right, guys. You guys have a wonderful day. I hope you like the new Max Factor or the new Daily Factor show. Tomorrow should be interesting. Yeah. Oh, Coach, we got another star in the house. We got another star. It's my good friend, Coach. Coach is my closest influencer friend. In Rod too, but Coach is, I talk to Coach more about influencing stuff. Rod's, anyway, Coach has always helps me. Sometimes I ask Coach for advice on videos and different things. Coach is a big help. Coach is also an option bro now too. Coach, how's your option trading going? You still running those poor man's, or what are you running? You're just running like poor man's covered calls, right? You aren't, I forget what you're doing, but you're selling some premium and you're killing it. I mean, last I saw anyway. So thanks for being here. Is Alti better than Alt Y? I don't know. It's going to be like anything else. We're going to be able to put it in the Max Factor, and the Max Factor will tell us. We'll just look at the data. We're going to see how much risk ULTI gives us in relationship to ULTY, and then we're going to study the relationship to the reward. We're also going to factor in the volatility, what kind of, how far it moves up and down, what kind of freaking heartache it gives us. We'll throw it all in together, and the Max Factor will let us know. But I appreciate you being here, Coach. So I appreciate all you guys being here. Yeah, 40 PMCC makes a rich. I'm addicted to testing stuff in the back tester. And the poor man's covered call always is one of the best testing strategies because covered calls test all right, but they tie up so much capital, but you put on a poor man's covered call, you can get the covered call mechanics for like 1/10 the money. So that's called leverage. But I'm saying, you just get a lot of bang for your buck. I love the poor man's covered call, and I like risk reversals. I like selling put spreads to buy calls, but anyway, there's so many good trades out there. Tomorrow also should be interesting because we have a lot of earnings stocks coming up. I mean, we had earnings today, but I think about half the people in GPTY, don't we have big earnings tomorrow? Anyway, so I think I did well taking half the profit off GPTY just in case something, or not half the profit, just half the position. So I'm hoping I made the right decision. And I kind of felt bad when I was selling Alti. I felt bad. I felt like people are going to think I'm a fraud or whatever. I'm going to get shit, not from you guys, but from other people. Oh, you sold it. You're making it. But I mean, it went from 27% to 20%. And it wasn't half the position. It was half the profit. So I think that's fair. And as soon as I did it, I put it on Twitter just for full disclosure. Well, actually, I did. I put on Twitter that I took some risk off the table because it was right before 3, and I said I sold CD. I said I'm out of GDXY and took some risk off the table. Basically, what I did was rebalance. I'm not out of it. All right, guys. Well, thank you so much for being here, and I will talk to you guys soon.